this session. So today we are going to discuss two important chapters. That is chapter number 12 and the chapter number 18. We will if you have gone through first with the help of few questions and with the help of understanding the basic thing which is there behind these chapters, it will be very easy for you guys to revise these chapters. See, unlike other professional standards and unlike other chapters, these chapters like chapter number 12 digital audit and assurance, chapter number 18 ESG, they are kind of a chapter where you need to understand. For example, in professional ethics you have to remember clauses. For example, in standards you have to remember certain relevant provisions. But this chapter number 12 and the chapter number 18, they are pure logic. Trust me, if you understand the logic behind these chapters, if you understand the logic behind the concept, it will be very easy for you to do a quick revision of these chapters, provided first you have read the chapter, you have gone through the study material. These lectures, the revision lectures, are not the alternate of any full-fledged study. Okay, so you have to go through the study material, you have to read the chapter, you have to attend the previous full sessions, and then only this revision lectures will help you in quickly revising. Okay, before we proceed, any doubt? Any doubt with respect to any of the part that we have discussed till now? No? Okay, not an issue. So let's proceed with chapter number 12 first. We will start chapter number 12. Okay, we will discuss some questions on chapter number 12 and then we will proceed to the chapter number 18. Okay. Okay. Now, what is chapter 12 about? Chapter 12 is digital auditing and assurance. Okay, digital auditing and assurance, basically this chapter covers few things on the digital audit and auditing digitally. Both are different concepts. Can anyone tell me quickly what is digital audit? Quickly, what is digital audit? Okay, Geeta, good. Anyone else? What is digital audit?
Providing assurance on the IT effectiveness of the management.
Providing assurance on the IT effectiveness of the management. Yes, very good. Anyone else would like to add to something to this digital audit?
Sir, it's placing an assurance on the effectiveness of IT controls implemented in organization.
Okay, yes, very good. Okay, so now tell me, what is auditing digitally? What is auditing digitally?
Use of technology for audit.
Absolutely correct. Use of technology for audit. See, when I say digital audit, that means I'm placing assurance on the effectiveness of the IT systems which are implemented within a particular organization. It involves for me to review the technology which is there related to the controls or whatever I have identified. Okay, it's about the technology. I am auditing the technology. Understand that. Okay, now when I talk about auditing digitally is kind of using tools and technology to do the audit. For example, AI, for example, RPA, for example, blockchain technologies. When we use technology to do the audit, we call it auditing digitally. Okay, to understand auditing digitally and digital audit, we'll start with the question. Okay, we will take some questions and then on by that way we will proceed forward. Pretty easy question. It may appear a case scenario type big one, but it is not that much lengthy question, not a big question. Okay, let me read it. This question. You see, the sound is in the middle. Yeah.
Mahima and Co., chartered accountants, have been appointed as statutory auditors of Zenith Retail Limited, a rapidly growing e-commerce company with operations across India. Zenith processes lakhs of customer orders daily through its website and mobile app. The entire order-to-cash cycle, order placement, inventory reservation, dispatch, invoicing, payment, refunds, is executed through an integrated ERP, with data flowing from front-end apps to the ERP and payment gateway systems in real time. During the audit of FY 2025-26, Mahima and Co. decide to conduct a largely digital audit by extensively using data analytics and other technology-based tools instead of traditional, manual, sample-based procedures. Some of the key steps taken are: they obtain full population sales, returns, and payment data from the ERP and payment gateway, and run automated reconciliations to identify unmatched or unusual transactions.
Basically, what they are saying is they are performing some procedures. This is particularly the procedures that they have performed, okay, in relation to auditing digitally. For example, obtaining full sales population, entire population of sales, return, payment data, and they are doing automated reconciliations. For example, if there is a sale, then what is the payment in front of that or not? If there is a return on that, okay. So they are performing a sale to sale reconciliation. They are also using an automated tool to perform 100% matching of inventory inward and outward movements, comparing stock system stock with physical count conducted by the company in its warehouses. They are using data analytics to identify customers with unusually high return percentages, employees with frequent override system defined credit limits, and time slots with abnormal spike in order cancellation. Okay, where you have a very high order cancellation sudden. They conduct most walkthroughs and inquiry through secure video conferencing and share screens, and use the collaborative audit software for review notes and documentation instead of paper files. Okay. Now, the management of Zenith is curious to understand whether such a digital audit is really beneficial or whether a simply a change in the style with no real advantage over traditional audit. Explain the advantage of conducting a digital audit in the above case to the management. So here, there are two things we will discuss with respect to this particular question. Okay. So the first part of the question that we will be discussing is about, one, we are doing digital audit in this particular scenario. Second, we are talking about auditing digitally. But first, we will talk about digital audit over here. So tell management, like, what is the benefit of or advantages of digital audit in this scenario? Take a minute, read the question again, and then try to answer. Yes, Geeta, very good. Absolutely correct. So what do you think? What are the benefits of or advantages of digital audit?
So the advantages are it lowers the cost. By
Lower the
automating the
cost.
process,
Okay.
by automating the process, it reduces a lot of cost related to employees or whatever related expenses. and it increases efficiency and effectiveness.
Okay.
Then
Very
we can have better analytics and risk assessment procedures.
okay. Very good. Yes.
Also, in perspective of audit, it gives the better audit quality.
Better audit quality. Yes. What else? Anyone else would like to add something to this? What do you think would be the benefits or advantages of digital audit? Quickly. Anyone? No? Okay. So remember, I'll tell you the advantages, and we will also understand a way to easily remember this particular part. I'll also show you an easy way to remember this particular part, or you can say the advantages. So the answer for this particular question is on page number in your study material. If you come on your study material, page number 12.5, which is 1.3, advantages of digital audit. Okay, the easy way and the very effective way to remember, okay, to easy and effectively remember this particular part, that is advantages of digital audit, is you remember it by EQCRA. Okay, that is quality. We are talking about quality. Digital audit will bring quality. So EQCRA. Now, what is EQCR? EQCR talks about first effectiveness or efficiency, enhanced effectiveness and efficiency. Q, better audit quality. C, lower cost. R, improved risk assessment. And A for better analytics. So EQCRA will help you to understand what are the advantages of digital audit. Okay, so first, enhanced effectiveness and efficiency. That means when you do digital audit, why it enhances the effectiveness and efficiency? Because now you can rely upon the IT systems. You can take comfort from the IT systems. That means you are doing less substantive. You are not doing manual work a lot. Your work has reduced. Okay, so by extracting here in this particular scenario, full population, what you are doing is you are taking, verifying the entire population for a particular risk. That means no need to do further testing, or let's say a minimal testing will be required for that particular area. Second, better audit quality. Why better audit quality? Because you are looking at a lot of transactions, lakhs of transactions together at one go. If you take a manual approach, for example, like let's say for example, going through sample basis, it will be difficult. But now verifying the IT systems, verifying the payment receipts and a lot of things over here, verifying the controls which are placed in the systems, you are building a assurance on the system that things are working appropriately. And for some of the things, you can take now comfort on those controls, on the digital, that particular controls which are placed within the systems. So the assurance of the system helps you to understand where actually you should focus now. That's a better audit quality. Okay, then comes the lower cost. Usually if I ignore the technology, it is not going to make my audit easy. By relying or by providing an assurance, okay, and by testing the technology, what I'm doing is I'm taking a comfort over there, I'm reducing the cost, I am actually focusing on where I need to focus. Audit quality improves, efficiency, effectiveness improves, and that's result in the lower quality, lower cost. Again, better analytics, as we discussed, that efficiency, effectiveness, quality, all these are linked. and improved risk assessment, because now you know where you have to focus upon. That's why testing or doing a digital audit is very, very helpful, and these are the advantages of digital audit. Clear? Any doubt?
No, sir.
Straightforward, nothing difficult over here. Okay, so pretty much straightforward, like what is the benefits of digital audit. So now if this question comes in exam, you will be able to answer what are the benefits of digital audit. Okay, if no doubt, let us take one more question. Good question on similar particular line. Let me read.
Mehta and Verma, Chartered Accountants, a traditional audit firm, is conducting the statutory audit of a large, listed logistics company. The company's entire operations, from booking to delivery and invoicing, are managed through a complex, integrated ERP system, resulting in millions of transactions annually. The audit partner, Mr. Mehta, notes that the firm's current approach of manual testing and sampling is becoming highly inefficient. It requires significant man-hours for repetitive tasks and provides less assurance, as only a fraction of transactions can be reviewed. He proposes a strategic shift to auditing digitally, investing in data analytics tools and automation, like RPA, to test 100% of the transaction data, automate reconciliations, and create dynamic risk dashboards. The audit team, accustomed to manual methods, is hesitant. To get their buy-in, Mr. Mehta asks you, the IT audit lead, to explain the specific benefits this new approach will bring to their audit process. What are the key features or advantages of auditing digitally that you would explain?
Okay, so take a minute, straightforward question, nothing difficult over here. Read it and tell me, what do you think? What are the key features or advantages of auditing digitally? Yes, very good. Lavanya? Very good. Anyone else with the answer? Anyone? What do you think are the benefits or key features of auditing digitally?
Sir, automation and ease.
Automation and ease. Okay.
And few points are same as relates with the digital audit. Like it helps in efficiency, like risk assessment procedure.
Hmm.
Human dependency will be hugely reduced due to this.
Yes, very good.
And improved audit quality.
Yes. See, you may feel that there's some of the procedures or some of the benefits are same. The reason because, can you do a manual audit of digital systems? So when you have to do digital audit, somewhere down the line, you have to use technology to do that. That's where the correlation starts. That's where you will see a similarity between the both. Very good, Samanathan. Very good, Geeta. Okay, so to the easy way basically to remember this particular answer, okay, I will also give you an easy way to remember this particular answer is understand first of all that we are talking about auditing digitally. Okay, so in that case what you can do is if it is auditing digitally, then RDate. RDate is a shortcut you can easily use to remember the particular the benefits or the key features of auditing digitally. R stands for your risk assessment. Okay, that means now you have improved risk assessments over there. You have better risk assessments when you do when you use the technology. Okay, so R stands for the risk assessment. Then uh, when I talk about D talks about decreased or decreasing human dependency. Now we are using the technology that's why we have a decreased or decreasing human dependency. A talks about automation. Because we are using the technology, we are using a lot of automation, and that will bring us ease in that. Okay, when we talk about T talks about transparency, because now it's not a manual. It's basically, you can say, kind of the open-ended testing that you are open testing that you are doing. A lot of data analytics you are doing. The data analytics, the outcome is upfront. Okay, that's why it says that increase transparency, because I can now trace the transaction, I can now do the analytics, I can now have the entire results in front of me, I can do the entire transaction mapping. Okay, so for example, there is a one particular transaction. If the company is using a lot of different modules of softwares. Okay, for let's say for example, one for inventory, one for sales, one for payments, one for accounting. Now with the help of my auditing tools, I can club the data of all the modules and can trace a transaction from start to end through entire business cycle. That increase the transparency. And E stands for, as you know, efficiency. Okay, efficiency, and you can say that the effectiveness of the audit increases. This entire thing leads to improved quality of audit. Okay, so RDate will result into the improved quality of the audit, and that's the answer. If we can see, if we go back to the study material on page number 12.8, you have a key features and advantages of auditing digitally. We talked about decreasing human dependency, we talked about increased transparency, automation and ease, improved efficiency, better risk assessment. Then we talked about everything. Now this everything will result into improved quality of audits. So our date will result in improved quality of audit. That's how you can remember this particular answer. Clear? Any doubt? Any doubt? No?
No.
Okay. Let us proceed to one more good question. Okay. Let me bring up that question. Okay. The question is pretty simple. Focus Limited is a manufacturing company that is planning to implement a new digital system to streamline its production process and improve efficiency. The company appointed Mr. Raman as an IT manager. However, he is aware that merging technologies can bring significant benefit but also pose various risks to the organizations. In the context, he needs to identify examples of technological risk, associated with implementation of the new digital system and the control consideration necessary to mitigate this risk effectively. Take a minute, read the question again, and then try to answer. Yes, this is the second half of the question. Yes, very good. Very good, Samayathan. Okay, anyone? Very good, Samayathan. Yes. Very good, Lavanya. So first of all, what we are talking about here, what is the main thing that is being asked in this particular question? That what are the risk, technological risk, identify the examples of, see, whenever you have to answer a question, first make sure that you understand what is asked. So what you need to do is identify examples of technology risk associated with the implementation of new digital system and the control considered necessary to mitigate these risks effectively. But here we need to identify the examples of technological risk. That means when you write an answer, your answer should demonstrate those examples appropriately. Okay. So when we are writing the answer, we have to demonstrate the examples in a bit way that the risk appears appropriately. Second thing, and the controls considered necessary to mitigate this risk. The second part of this particular question talks about that what are the controls considered necessary to implement these risks effectively, mitigate this risk effectively. So you need to talk about these controls also. Examples of technological risk is one thing, but this question has something additional too. Then you need to answer that additional part also. So what do you think? So what are those controls also? Okay, very good, Samayathan. Okay, yes, very good. Anyone else with something further to add? I'll explain the answer, don't worry. But yeah, anyone else would like to add something more before I discuss the answer? Okay, so let me discuss the answer then. So what we are talking about, first of all, the risk. Okay, risk associated with the technology. So let us go to the study material and we'll understand what are the risks and where they are given. Okay, because we are also really correlating the question and the answer from your study material so that you can understand, what questions can come from which type of topic. Okay, so if you come on the page number 12.13, Over there, you have identifying the risk from risk arising from the usage of IT. Okay. Over there, you have examples given. For example, unauthorized access to the data. One example is unauthorized access to the data. This is the technological risk. If someone gets the data, they can destroy the data, they can make an improper changes to the data, they can enter the transactions to the data which do not exist, non-existent existent transactions. They can provide inaccurate recordings of the transaction. They can do a lot of things if they get the unauthorized access to the data. That's the biggest technological risk. Second, gaining access privileges, super user rights, kind of access privilege. That means they can change someone else's right. They can break down segregations of duties, they can change approval limits, they can do whatever they want. Now they are the admin, master admin. They can change the usage, access rights, and the limits, everything that is there in the system. And that is again kind of an unauthorized accesses. Unauthorized changes to the IT applications. For example, I'll give you a simple example that we have seen practically. So there was a forex system, okay, that a company implemented. This forex system role was to convert foreign subsidiary accounts into local currency. So foreign subsidiary accounts which were there in the foreign currency, it was supposed to be converted into local currency by using a exchange rate. Okay. Now the problem was this system. What it was doing is it was converting, but let's say usually the forex rates are, let's say for example, I have taken USD INR. Okay, what I will take the rate is something about rupees 90.2828 something, hypothetical example. I don't know the current rate. Let's say, but this is a foreign exchange rate, hypothetical example. But the system was taking, because there was a recent changes to the system which were not approved, which were not reviewed. The system was only taking the rate of 90. It was omitting this entire 2828 something. And because of that, huge foreign exchange gain and losses were arising on translation, on conversion. Okay, there was a huge impact on the foreign exchange gain and losses, because for each and every transaction that was converted, the decimals were avoided, and that was resulting in millions of transactions and millions of things were there that were required to be converted, and that created a chaos when the actual numbers came. The numbers were looked into, and then it was realized that the system that is converting from foreign currency to the local currency, it omitted the decimals. That was an unauthorized change to IT applications, can create a chaos. Failure to make necessary IT updates. Failure to make. For example, if your system is not updating, if you do not keep your system updated, anyone can utilize a particular issue in your system. Let's say for example, there is a vulnerability, there is a risk in your system. If it is not updated from time to time, it will be anyone can utilize that particular chance and exploit that vulnerability, and can hack your systems. So failure to make updates with whenever it is required. Inappropriate manual intervention. Inappropriate manual intervention means, for example, this entire transaction of forex conversion was automated. This entire transaction of forex conversion was automated, but someone, what he did is he tried to put manual rates for certain type of transactions or certain type of numbers. So that was inappropriate manual intervention. When there was not required, still someone tried to override the automated process by providing manual exchange rates, which were not coming from the system. It was manually inputted, like improper manual intervention. But that is again goes with to the improper manual intervention can happen when you have a access privilege, you have unauthorized access, or the system allows you to do that. There are lack of controls. Then you can do an improper manual intervention. Data loss, data corruption. So data loss, data corruption is a very very big issue. For example, data loss due to uh, there are many ransomware attacks, and over there you lose the data. Data corruption, system crash, data is corrupted, you don't have the access to the data. Best example, sometimes your Excel file closes, suddenly you work, okay, that's a crash. Data gets corrupted, you lose the data. Risk of system downtime. A lot of times, our systems are hosted on cloud. Now, if there is cyber attack, if there is power outage, if there is something, there is a risk of system downtime. Okay, system integration and compatibility. Now, compatibility means, for example, this forex system. The role was to convert foreign currency financial statement into local currency. But what after that? It has to provide data to something. So forex system was providing the data to the accounting system, whatever ERP that was there. Okay. Now, what if they are not compatible? That means the data, the format of the forex system is something which is not acceptable by the ERP. What is the use of forex system? Then it will create a problem. Sometimes it is not appropriately mapped. Classic example I will tell you, most of you might have also seen, is when you file your income tax returns or when you generate income tax returns, they are generated into XML format, the format of the file. Okay, you use a software. Now try to open that XML file into any other software. You will see that the compatibility is gone. Some of the data will be lost. Why? Reason because that the data and system compatibility is not there even when you have a same file format. So the compatibility is a very big issue when the technology comes into the picture. So these are the few technological risks that can arise by the use of IT. Clear? Any doubt to this one? Any doubt? So if you see the answer also, inaccurately processing data, unauthorized access, okay, gaining access privilege, unauthorized erroneous change to the data master files, okay, unauthorized change to the system, failures to make appropriate changes to the system, inappropriate manual intervention, potential loss of data, risk introduced when third-party service providers, cybersecurity risk. These are some certain examples. Okay. Now, what they should do to mitigate the risk effectively? What they should do to mitigate the risk effectively? Okay, let's talk about from the audit point of view. When you are doing the auditing, what you do to make sure that you understand the risk which is there in the audit? To identify the risk, what you do in the case of audit?
You will try to understand the flow of such applications or any technological advancements.
Yes, very good. When in case of an audit, what we do is when we try to do a risk assessment, when we try to identify the risk, we first of all perform understanding of the entity. Okay, here we are not doing the risk assessment with respect to the audit. We are trying to understand the technological risk, and that is to do the change in technology. If you read the question, it talks about when there is a change in technology. So here they are shifting from one particular technology to another technology. Okay, they are planning to implement a new digital system. If you talk about this particular question, that's why it's important to read the question. So implement a new digital system to streamline its production and process. Okay. So as correctly said, like pointed out that we need to understand these systems. We need to understand the change requirement. First of all, to mitigate the risk of unauthorized access, system integrity, compatibility, all that stuff, understand what is the change, why it is required, what is the benefit of the change. Okay, understand and evaluate the management process for initiating, processing, and recording the transactions, and how the change may impact that. So you need to gain an holistic view or understanding of the change in the information technology environment from the old system to the new system. Understand that, okay, identify those risks. So see, examples is one thing. To mitigate the risk, first of all, you need to understand the IT systems. Then you need to identify the risk resulting from the implementation of the new system, that you should appropriately identify all the risks which are there. Examples which are given above, they are the examples. Not necessarily all the risks given in the examples might be present. So you need to understand which are present, which are not. And then you need to bring up that particular skill, okay, who can help you in the design, implementation, and operative effectiveness of the controls around these IT systems, so that the risk can be mitigated. So at the end, you need to make sure that you have a skill to design, implement, and operate the controls effectively throughout the period, so that these risks can be mitigated. Simple 3-step approach. If I talk about understand, identify, implement. So you need to understand the environment, information technology environment, identify the risk related to the technology, okay, consider the risk relating from the technology, and you need to implement the controls which are required, necessary. Clear? Any doubt? Any doubt?
Sir, answer for this, I mean, you have pointed out, sir, understand, identify, and implement. I mean, in which page it is there, sir, in audit book? I mean, where can we get that?
It may not be directly one-to-one linked, but yeah, it's simple. Like it's a normal similar one. Like if you want to respond to any what you can say IT risk, so you can like this is similar process. Also, if I show you something on the study material, wait a minute. If you come on the page 12.15, okay, over there you have understanding and responding to the risk of from IT dependency. Okay, so if you see over here also, basically, so what is given is you need to understand the risk. You need to in this particular example and the chart which is given. Okay, so here also it is mentioned like how you need to basically understand and respond to the risk arising from the IT dependency. So one such example you can refer over here. But basically, I would say that, like it's similar, like understand, identify, and implement is a common process to, mitigate any risk.
Sir, they have mentioned something regarding management may implement important information technology general controls. I mean, what are those, sir? I mean, just to understand it.
See, again, this particular part that I'm talking about, this is IT dependency. That's why they are referring to the ITGC controls over here. Okay. Now, what is ITGC controls? ITGC controls are the controls which are, general controls which complement the entire IT systems. For example, access security. Over there, they have given the example: access security, program change, data center and network operations controls, related controls. Okay. whether data is appropriately backed up or not, all those things. So these are some of the examples of the ITGC, IT general controls, password policies, password accesses, something like that. Okay, which are not related to a specific IT applications. They are the general controls which are applicable to entire IT environment. And because of that, I can have an sense that the general environment of the IT is secure. For example, let's say your ERP. To run a ERP, you need a server, you need a base software. For example, you may need a Windows, you might need a Linux or something else. Okay, a base operating system on which the ERP will run. Now what if the controls, or what if the base software operating system is not secure enough? Although the ERP might be 10 times secure, but if your operating system is not that much secured, no use. That's why the IT general controls, which is not specific to the application but generally applicable to the entire IT environment, also plays an important role. And this particular part talks about the ITGC because it's the IT dependency.
Okay, sir, got it.
But generally, if I pointed out, because everywhere it is same. Like if you want to mitigate a risk, if you want to address a risk, simple. Understand what is a change, what is the environment, identify the risk, and then implement. Like even in the audit, what we do is understand the entity, we perform the risk assessment and identify where is the risk of material misstatement, and based on that we perform the procedures, audit procedures, to gather the sufficient and appropriate audit evidence. Three-step approach everywhere will work. Here, any doubt till now? Any doubt?
No, sir.
Okay. If no doubt, let's take one more question on kind of similar lines. Just let me share the screen.
SRS and Associates, Chartered Accountants, have been appointed as statutory auditors of CloudCart Limited, a fast-growing online marketplace. CloudCart operates entirely in an automated environment. Customer orders are placed through a mobile app website, inventory and pricing are controlled through a central ERP, payments are routed via multiple payment gateways, and logistics partners are integrated through APIs. The company has recently migrated from a legacy on-premise ERP to a cloud-based platform, and has also implemented a separate data warehouse for analytics. During the planning meeting, the engagement partner of SRS and Associates notes that almost all sales, purchase and inventory transactions are initiated, processed and recorded through IT applications with minimal manual intervention. There are multiple interfacing systems, app, ERP, payment gateways, logistics portal, data warehouse, and management is heavily relying on automated reports for financial reporting. The internal IT team mentions that some critical controls, like credit limit checks and duplicate vendor master checks, are embedded in the applications, while user provisioning, password policies, and backup processes are managed centrally by the cloud service provider and...
Oh, sorry. Something happened. Just a minute. What happened? Just a minute. Yep. Let me read. The internal IT team mentions that some critical control like credit limit check and duplicate vendor master check are embedded in the application, while user provisioning, password policies, backup processes are managed centrally by the cloud service provider and the company's IT department. The audit team realizes that before deciding whether and how to rely on the IT-based controls and data, they need a structured understanding of the cloud card's IT environment. As a senior in charge, you are required to explain to the team key areas that they should understand regarding the IT environment of cloud card for effective audit planning and risk assessment. So take a minute, read the question again, and then try to answer.
Harsha?
Yep. Yes. So tell me, what do you think here? What should be the key areas that they should understand regarding the IT environment? Quickly. Here, basically, understand, like here the entire scenario, okay, they are talking about the IT environment. Like here we need to understand about the IT environment. We need to gather the understanding about the IT environment for the effective audit planning and risk assessment. You already seen something similar when you do the your audit planning. Something similar we have also read in our auditing standards. Very good, Samanathan. Yes, absolutely correct.
So we should understand the flow of transactions,
Yes,
identification of significant systems, and
absolutely
the
correct.
technologies used by the management.
Okay, yes. What else? Anyone else? Yes, Samanathan, very good. Anyone else? Yes, Geeta, very good. See, it is similar to what we have seen for the audit. It's nothing different over here. Okay. So when you do a audit at that point in time, you understand the entity. Over here, we are also, even SA 315 talks about this, that when you need to understand the IT environment, what you need to do. So on a similar lines, like here in this particular scenario, we will talk about like when we need to understand the IT environment, what we are required to do. First of all, understanding starts with the here in case of an IT environment, when we talk about the system, understanding of the IT environment start with the flow of the transaction, from where to where the transaction moves, from where it starts, from which systems is processed through, where it goes through, and where it gets stored, and where it gets terminated. The entire flow of the transaction is relevant over here. Second, identification of significant systems. Why significant system? As I said, like forex system in our earlier example. Okay, one system can create a issue if it is not appropriately configured. So you need to understand which are the significant systems in place, not only the accounting part, but also the systems which are relevant for the purpose of accounting, which may have a direct impact on the accounting. Okay, order capture, platform payments, gateways, payment gateways. What if there is an issue in the payment gateway that the payment received are incorrectly mapped in front of other customers? Okay, then after that you need to understand the manual and automated controls. Why controls? First I understood the flow from where to where it is goes, then I understood the system and through which the transaction passes. Okay, which are the significant system through which the transaction passes? I understand about the system. Now I will understand about the controls within the system. Reason, because of the IT risk. Just now we saw there is a IT risk involved. Okay, there are multiple IT risks. To mitigate the risk, we need controls. Okay. Similarly, to understand the system, we need to understand the manual and automated controls which are there with the use of IT, the entity which the controls which are implemented by the entity. And then the technology used, for example, if there is some additional technology or some specific technology used behind the systems, for example, blockchain, for example, AI, which is a layer over the technology, which is a layer over the IT environment. For example, AI monitoring to make sure that the transactions are recorded appropriately. AI quality control systems. Okay, so some of the technologies which are embedded into the systems, into the IT environment, which acts as a layer over your IT infrastructure, over your IT systems which are already designed, which can increase the complexity. So you need to understand that. And based on that, as I said, which can increase the complexity. At the end, you need to understand what is the complexity of the entire IT environment. Okay. Why complexity? Because the more complex it is, the more understanding it may require, the more reliance we need to place on that particular system, the more testing we need to do for that particular system to place the reliance. Okay, so it's kind of a loop that higher the complexity, higher the reliance we need, higher the reliance we need, higher the testing we need to do. So you need to understand the entire complexity of the IT system and individual systems. This is how you can understand the IT environment in total. Clear? Any doubt? And the answer for this on the similar lines is in your module page number 12.12. Over there, you have a 3.1, which talks about key areas for an auditor to understand the IT environment. That is, understand the flow of the transaction, identification of significant systems, identification of manual and automated controls, identification of the technologies used, for example, robotics, artificial intelligence. Okay, assessing the complexity of the IT environment at the end to understand, like, what is the reliance I need to place, and for that, what testing I need to do. Clear? Any doubt with respect to that question? Any doubt? No? Okay. If not, then let's proceed to one more good such question. Okay. So the question's simple, short. Okay. ABC Bank recently faced a cyber attack where hackers attempted to steal customer data. This raised concerns about their cybersecurity measures. Regulators now require financial institutions to assess their cyber risk management and improve their defenses against such threats. To handle cyber risk effectively, it is important to understand its key stages. Elucidate the stages of the cyber risk that an organization should focus upon. So you are required to provide the risk or the stages of the cyber risk. Okay. So what are the stages of cyber risk? Quickly, stages of cyber risk. Okay, tell me first of all, what is cyber risk? What is cyber risk?
The risk of unauthorized access for the system, for the deletion and the alteration.
Yes, absolutely correct.
Like that the stages are aim. We have to aim it.
Yes.
That assessing the cyber risk, impact of the cyber risk, and managing cyber risk. A for assessing, I for impact, M for managing.
Absolutely correct. Very good. Anyone else would like to add something to this?
Yes, sir. Cyber risk is an attempt to gain unauthorized access to computing or network in order to cause the damage or get the data or steal. Data theft, etc.
Okay, yes, very good. See, when I talk about cyber risk, okay, what is cyber risk? Cyber risk, these are the risks of a cyber attack on your system, on your IT systems. Okay. Cyber risk, basically, it includes kind of, a various type of attacks that can happen to your IT system, related to the malware, related to the phishing, spoofing, insider threat. A lot of cyber risk are there and cyber attacks are there. Okay. For example, malware, let's say some viruses, ransomware, torsion. Okay. So these are some example of cyber risk. Now the question over here that we are looking into talks about the key stages of cyber risk. Okay. Like, what are the stages of the cyber risk that any organization should focus upon? Now, the stages of the cyber risk, when I talk about stages, that means what happens when a cyber risk is there? What is the scenario when a cyber risk is there? Okay, what an organization does. So when organization have to understand about a cyber risk, first of all, they need to assess the cyber risk. That means identify how much it is there. Assessing is identifying and understanding the cyber risk together. Okay, I'm assessing the cyber risk. So what are the cyber risks which are applicable to a particular organization, or in this particular case, to the particular bank, okay, or to a particular, any other organization which is there. Now, once you understand the cyber risk, once you assess the cyber risk, the second step is to do a impact analysis of that particular cyber risk. Now, when I talk about impact analysis, can anyone tell me what are the type of impacts that can be there due to a cyber risk? What kind of impact we are talking about that can be there in case of a cyber risk? Anyone?
Fine and penalties,
Yes.
data loss,
Yes.
some intellectual theft of the intellectual property, business will be
Any
stopped.
other type?
Yeah,
Yeah.
business
Yes.
stoppage of the business.
Yes. Very good. Absolutely correct. So we are not only talking about the impact because of the, any malware or system down or IT data loss, something, but we are talking also about indirect impact, regulatory cost. When when there is a data breach, for example, in case of a bank, customer data breach, let's say there is a breach of credit card data, huge risk. You have to cancel all the credit cards, and a lot of things can is required to be done. Customer data, KYC data gets breached. Regulatory will, RBI will issue a huge penalty to you because you did not maintain the relevant cyber security. Business interruptions, that means if there is a cyber attack on your organization, your business might go down. For example, tomorrow if I identify that whatever transaction I will take from this particular bank's website, it is being monitored, it is being lead, I will not do any transaction. I will even not remove my entire amount from your bank and will go to some other bank. Data loss, reputational loss, litigations for the people who already lost their amount, information, whatsoever it is. IP lost. For example, if there is a IP in development and there is a cyber attack because of which the data gets leaked, the IP which is in development will also get leaked. Incident response cost. Sometimes you need to hire some investigation teams and some teams to just to understand how much deep the impact is. Breach of privacy, fines and penalties, a lot of things can be there with respect to the impact of cyber risk. Third stage of the cyber risk, once an organization wants to identify the cyber risk, is managing. Okay, managing means looking into a holistic view of the cyber risk, like how I can manage it, how I can implement the cybersecurity programs, or whether my existing programs are sufficient enough. What is the major cyber risk in the organization, and for that, what do I have the programs? What cyber securities do I have? Do I have a firewall? Do I have some huge systems which can detect unauthorized accesses, kind of intrusion detection systems, or some advanced systems? Okay. Do I have like access management modules? Nowadays they call it IAM modules. Understanding the risk, and sometimes you may also accept a risk that the risk is very minimal. Even, let's say for example, even after implementing the top-notch cyber security, there is no guarantee that you are 100% proof. So that means you accept some level of risk that, okay, I have done what I can do, but still there is some minute level of risk which is still open, and that has to be assumed, that has to be accepted. So understanding the accepted risk, how much I have accepted, which is whether that is within the tolerable rate or within the rate that is will not impact my business. So these are the three stages of basically understanding of cyber risk. And if we see on a study material, so which is given on page 12.20, that is 5.2, we are talking about the stages of the cyber risk. We will, whenever we talk about the stages of cyber risk, we have to aim it to understand the cyber risk. Aim to understand the cyber risk, that is assessing, understanding the impact, and managing. So assessing the cyber risk, impact of the cyber risk, managing the cyber risk. Aim for it. Okay. So that's how you can basically understand the cyber risk. Assessing, as we discussed, like ransomware, like what is the insider issues, something like that. Impact, regulatory, business interruptions, data loss, ransomware, IP theft, incident response costs, breach of privacy, fines and penalties. And managing, gaining an holistic overview of the IT risk, understanding the existing IT cybersecurity programs. Okay, then understanding the risk which is accepted, which is remaining there. So this is how you can manage the cyber risk. Clear? Any doubt with this? Any doubt? Okay. Now, if no doubts, so we will take one more question on the similar line. Okay, we will take one more important question on the similar line. Let me bring the question. Okay, let me read the question.
Medcare Hospitals Limited is a listed company running a network of hospitals and an online consultation platform where appointments, billing, and medical reports are handled through integrated IT systems hosted on cloud. During the year, the company faced repeated phishing attempts on employee emails, multiple failed login attempts on its billing application from foreign locations, and a 2-day disruption of its patient portal due to a suspected malware incident at its cloud service provider. The audit committee has asked the statutory auditors to specifically evaluate how cybersecurity risks are being identified and managed, and whether any such risks could affect the completeness and reliability of revenue and receivable data. Explain how the auditors should approach cybersecurity risk assessment in this case.
In this particular scenario, in this question, okay, take a minute and read. But what we are talking about, what is asked basically, explain how the auditor should approach the cybersecurity risk assessment in this case. So we are talking about something called cybersecurity risk assessment. Now, what we did was understanding the cyber risk, first of all. When you identify a cyber risk, what the organization should do, that we saw. But now we will look into the cyber security framework. Okay. Cyber security framework basically talks about the entire framework, which is not only the understanding the risk and what is doing for the risk, but what if that risk get materialized? Okay. What if that particular risk get materialized? So here we will not focus upon only, like kind of a scenario where we are just identifying the risk and saying what is the risk. But what if the risk get materialized? We are looking from the holistic approach. So what do you think? What should be the cybersecurity risk assessment in this scenario, or what approach they should follow for the cyber security? Anyone? Yes, Samanathan, very good.
Sir, is it identifying the risk? I mean, protecting the risk, detecting the
Yes,
risk.
we are talking about the framework. Yes.
Yeah. Responding to the risk and recover from the risk.
Yes, absolutely correct. So we are talking about the cybersecurity framework. So approach or framework, we need to adopt that. Okay. Framework for cybersecurity risk, or framework for cybersecurity we are talking about in this particular scenario. Okay. Now, when I talk about the entire framework for the cybersecurity, okay, that includes not only with respect to the risk, but also includes what if that the risk gets materialized. So it starts with the identifying the risk. First of all, we identify the risk in the cybersecurity framework. When I say identify the risk, so similarly, like the way we identified and assessed the risk when we were understanding, okay, the cyber risk, similarly, we will also now, first of all, identify the risk. What is the risk? Periodic, we will develop the periodic risk assessment. Now here, rather than talking about the type of risk, we will talk about more onto how to identify the risk. When I talk about cyber security framework, I will be more focused on how to achieve that, how to achieve the identification of risk. So how to achieve that? Number one, periodic risk assessment. You need to develop a strategy to identify the risk. Okay. You need to periodically review the information systems, IT systems, okay, all the systems which are there, to understand what risk can, arise in those systems. So by that way, you need to understand what are the, risks there. You need to identify what are the risks. Second, once you identify, you need to protect your system from that particular risk. When I say protecting, that is managing. Okay, we are talking about the managing part, similar to managing part. Okay, managing is a like kind of a bigger term. Protecting is one sub part of that. That we need to protect the risk. Like for example, if there is unauthorized access, then what we can do to protect from unauthorized access. If there is data loss, what can be done to protect from that data loss? Now our focus is on protecting. Now our focus is on that cyber security programs that we were talking about, like how to mitigate those risks. So we are talking about protecting the risk by implementing some programs. Okay, then next, after protecting the risk, you also need to detect the risk. Prevention is one thing, detection is another thing. There are two separate things. One is the prevention. That is, you prevent the risk from occurring, but that is never 100%. Is prevention 100%? Answer is no, it's not. That's why our next steps come into the picture. We talk about detecting the risk. It's not only about prevention, it's about detecting if there is some breach has happened, the risk has materialized, someone has gained the unauthorized access. We are talking about detecting the risk. If someone has breached the firewall. Now, if you detect the risk, what is the next step for after that? Once you detect, you have to
Respond.
Yes, very good. Respond.
Sir, before that, I have one doubt, sir.
Yes.
Here, I mean, the first point is identifying the risk, no, sir. I mean, we will identify the risk in the first place. Then again, in the third point, we will detect the risk. I mean, what is the difference between identifying and detecting detecting the risk?
Identifying the risk. For example, we will take the classic example of our forex system. Okay. So forex system, what was the risk? Basically, we saw that it was not updated. Okay, not being updated, or let's say, for example, unauthorized update, basically unauthorized changes to the system. Unauthorized update to the system caused this particular error. Okay, now that was a risk that we identified. Now, for example, one of the risks we identified is if someone makes an unauthorized update to the system, because anyone can do that. There is no control in the system. So we identified the risk. Detecting the risk is whether anyone has made unauthorized changes. So in the first part, you check whether is it possible to make an unauthorized change to the system, whether it is possible. If you say yes, that's a risk. In the third part, you check whether has anyone made these changes. In first part, we are only checking whether it is possible or not. In the third part, what we are doing is we are identifying if it was possible, then whether anyone has utilized that particular thing, like not utilized, but intentionally made unauthorized changes, or unintentionally that has caused system to act weirdly. That's detecting. Clear? I hope it's clear. Any further doubt?
No, sir. It's clear.
Okay. So once you detect, once you respond, then comes the next part. What is the next part? What is the next part after responding?
Recover from the risk.
Yes, recover from the risk. So for example, if someone has made unauthorized changes, what do you need to do? First of all, you need to respond to the risk. That means immediately bring controls or discard the system. Whatever is possible, respond to the risk at that particular point in time. Either bring controls or discard the system, bring some new system, bring some new checks, bring something different, so that in future no one can make unauthorized changes. But there is one also important part is a recovering. That means, what about the things which have already gone wrong? You have to bring all the things back on the track. If a forex system has created so much issue that the previous financials of the foreign company, foreign subsidiary are not appropriate, responding means that going forward the financials of the foreign subsidiary will be appropriate. Recovering means what has gone wrong, rectifying that. You bring everything back on track, that whatever has gone wrong because of this unauthorized changes and wrong calculations, now it has to be rectified. Going forward, yes, we understand you responded, now it will be appropriate. But what about the past? That is recovery. Clear?
Yes, sir.
So if I bring it this particular part, and if I show you this part in the study material, it is on the page 12.21. Okay, the answer is you can say that this is cyber security framework that we discussed just now. Identify the risk, as I said, periodic risk assessments, develop management strategy. Okay, we are talking about identifying information systems or assets. We are talking about understanding the business environment. Okay, who is responsible for that? Then we are talking about protecting the system. Okay, monitoring whether there has been unauthorized changes, safeguarding the assets, bringing those things, bringing controls in place, implementing effective controls for data security, trainings, conducting cyber security trainings to make sure that teams are aware about the risk, detecting the risk. That means if there has been a breach, if there is any anomalies, breach, incident in the fire, in any of the system, if there is something, some information in the firewall logs, so you need to use that particular information to identify if there is any security breach or incident. Okay, someone has bypassed your firewalls. Detecting the risk, responding to the risk. Responding means that what you do to make sure that the breach is contained, like you are doing something, okay, to make sure that the severity of the attack and the things get reduced. You are responding to that particular breach. Okay, so basically you are trying to, in this particular case, what you are trying to do is responding the breach, so that the remediation cost and all those stuff can go down. The breach should not expand. You are taking actions and then recovering, that is making sure the business is up and running, bringing back to the normal. If something has gone wrong, first of all you will respond to that, and then you will recover from that. Okay, any doubt to this? Any doubt to the cyber security framework? Yes, no?
No, sir.
Okay, now can anyone give me some examples of controls? Okay, we are talking about controls for the cyber risk. Okay, cyber risk controls. Can anyone tell me some examples of controls around vendor setup and modification? So what controls would you place, okay, for the cyber security, cyber risk with respect to vendor setup? Anyone? What controls would you place?
Sir, dual authentication.
Okay, yes. First of all, understand why we need, when a question comes on the controls around vendor setup with respect to cyber risk. Okay, first of all, understand what could be the cyber risk in case of vendor setup. What could be the cyber risk?
Bank account changes.
Bank account changes, yes, very good.
See, is there any, whenever there is any changes in the vendor setup, it has to immediately trigger the email to the respective department, including the vendor as well.
Yes.
It has any changes to be communicated, it has to be authorized.
System will be easily accessible to the vendor so that he can make some manual changes whenever he wants.
I mean, the few vendor-related information will be changed, and I mean, money disbursement will happen like to other party or something like that.
Yes. So basically, see, what happens is when, let's say, for example, we are talking about cyber risk, which is related to the IT systems in case of vendor setup. Now, when I talk about vendor setup is a very crucial process. That means if anything wrong at the vendor setup will impact a lot of things at the time of purchasing, at the time of payment. Let's say if I by mistake enter a wrong bank account for the vendor setup, at the time of vendor setup I enter a fraudulent bank account, no one will come to know. Every payment will go till the time someone raises a question from the vendor side. And even though when the question should raise to the reach to the appropriate personnel, or at max what will happen is vendor will stop supplying and may ask that, okay, clear my old dues, otherwise I will not proceed, something like that. Okay, so but by that time payments might have already gone to someone else. So when I talk about cyber risk around the vendor setup, it includes phishing. Let's say, for example, you are getting an email from a similar domain of what of vendor it is. Okay, let's say vendor's domain is abcmanufacturing.com. Now you are getting an email from abcmanufacturing.in. Okay, and they are asking you to change your bank account there because there has been change. It appears to be a general communication. In that case, okay, you will get a phishing scam or phishing email and in your organization. Okay, and then someone will see, okay, there is a request from the vendor, let's change the bank account. So these are the risks around vendor setup and modification. Cyber risk of phishing, cyber risk of unauthorized access to the vendor masters. So as a result, you need to have appropriate controls for that. You first of all, you need to understand who is responsible for making those changes to the vendor master, whether that person or whether the email ID of that person is publicly available, so that people can directly reach out to him for the changes, or is there a process through which the changes will reach to that particular person. If not, then the control should be, there should be a process that the person who is making the changes should not be directly being should be received by him. There should be a process, centralized or decentralized, by which the changes should receive to him, and he should then, after checking the approvals and everything, should make the changes. Then what are the mode of communication which is used by the vendor to communicate the changes in bank account, in address, or other things? Is there any email mode? Do we have the official email IDs? Third, what is the systems that are being used to initiate the request for the vendor master change? Is the email sufficient, that the email from vendor for the making the vendor master change, or is there any system based control that first raises the request in the system, it gets approved, or then it proceeds further? And what are the authentication protocol to identify the modification? So sometimes a lot of organizations implement post modification audits, that on a monthly basis there will be an audit of the modification to the vendor data, whether appropriate supporting was there, whether it was authorized by vendor, whether it was approved by the vendor, whether they reached out to the vendor to check whether the changes were or the request was received from them or not. So all these controls and the risks are there, which can be you can say implemented to make sure that the risk can be addressed around the vendor modification and vendor setup. And we are specifically talking about cyber risk. Clear? So a question can also come on this particular part, but we understood how to answer this particular question also. Any doubt? Okay. If no further doubts, let's do one thing. Let's take a quick 10-minute break. After the break, we'll gather back and we'll continue the session with the next topic. Okay. Let's take a quick 10-minute break. Yes. Thank you. the session. Before I proceed to the next topic for the today, any doubt with respect to the questions that we have discussed, or any doubt with respect to the topic that we discussed today, that the digital audit and assurance? Any doubt on that? Okay, if no doubt, let's proceed to the next topic, that is sustainable development goals, environment, social and governance assurance, that is the ESG assurance and SGD. Okay, these are the emerging areas. Now this is your chapter number 18, and trust me, one of the very easy chapter which you have. Okay, because again, as I said, understand conceptually what is the scenario, and your chapter is done, revision is done. Okay, so we will start this chapter with one question. First of all, let's take a question, okay, and then we will proceed further and understand more things into the chapter. Just a minute, let me bring the question. Yeah, so the question is, Migger Limited is a multinational corporation that prides itself on sustainable business practice and holistic value creation. During a recent board meeting, the CEO emphasized the importance of disclosing not just financial performance, but also non-financial aspects that contribute to long-term success. The company's sustainability team highlighted their investment in cutting-edge research, employee skill development, strong supplier relationship, and eco-friendly infrastructure. To ensure a well-grounded and transparent report, the company's CFO suggested adopting integrated reporting. The board members, however, are unfamiliar with the concept and asked for a clear breakdown of key elements. As a consultant, how would you explain the essential components of integrated reporting to the board? Take a minute, read the question, and then try to answer. How will you, in this particular scenario, explain the essential components with respect to the integrated reporting to the board? Okay, so focus on the question what is asked. Focus on the part of the question what is asked in this particular scenario. So tell me, what do you think? How will you report, or how will you explain them? What you will explain them? Quickly, what you will explain them in this particular scenario?
Sir, integrated reporting mainly focuses on 6 C's, that is 6 capitals. Financial capital,
Yes.
Which mainly focuses on funds managed by the entity.
Yes.
Next, manufactured capital, which focuses on the infrastructure of the entity.
Okay.
Natural capital, that is the natural resources which are used by the entity to produce products or to render services. Next, human capital, it talks about the employees in the organization and their skills required.
Yes.
Next is social capital. It focuses on the relationship of the entity in the community and with the other groups. And the last one is intellectual capital. It focuses on the company's investments in the R&D sector.
Okay. Very good. Very good. So do you know from where this integrated reporting is there? Like, what is the background of integrated reporting? From where it came? Anyone? What is the integrated reporting? From where it came? Anyone? No? Let me explain. See, integrated reporting framework, which is now under the IFRS Foundation, okay, it was the basically originally created by, there was a council, integrated International Integrated Reporting Council in 2010. This integrated reporting first was brought in 2010. Okay, why it was at that, from since 2010 it was required that people were focusing on ESG, people were focusing on a lot of things with respect to sustainability. As a result, there was a group, and there was this particular group of people or council, we call it, okay, and then they brought this particular integrated reporting, okay, international integrated reporting framework, and there was a council for that. This particular reporting format, it was focused on 6 C's, 6 capitals. That is, 1, financial capital, funds and financial resources for the business. Manufactured capital, physical assets, infrastructure and equipment. Intellectual capital, knowledge based in capital related thing. Human capital, people skills, experience. Social and relationship capital, okay, we talk about relationship, community, we talk about brand reputation. Natural capital, we talk about environmental resource such as water, land, minerals, biodiversity. Now the question was what to do with this capital. Okay, what companies do with this capital? Can anyone tell me what companies do all with this capital? Okay, integrated framework, 6 capital, but what is the use of these 6 capitals? Anyone?
If the company reports on how it is utilizing the capital in these different areas, the investors can take a quality decision whether to invest in the company or not, whether the company is maintaining the sustainable goals or not.
Very good, absolutely correct. So these are the reporting parameters. When I talk about 6 capitals, these are the reporting parameters. Company demonstrate that through these capital, what is the value creation, how these reporting on these capital happens. Like, company will report on financial capital, how the financial capital has been utilized, okay, how the manufactured capital has been utilized, what it has generated, how your natural capital has been utilized. So there were key performance indicators for each of the capitals that were known as the KPIs. Okay, there were key performance indicators for each of the capital that were decided on which the company will report. Okay, so for each of the capital there was a reporting performance indicators. There were performance indicators. For example, if I talk about with respect to let's say employee, then what is the ratio of employees with respect to the differently abled employees? What is the ratio of employees from the rural and urban? What is the employee ratio of male, female? A lot of key performance indicators were there. So these key performance indicators basically are then reported by the company on each of the capital level to demonstrate what is their output, input, and value creation. So you can say intellectual capital, human capital, manufactured capital, these are the inputs that is a company taking to give some output as a value creation. Okay, so that's where you need to understand why 6 capitals and how these 6 capital used. These 6 capitals are used, and then the company shows what is the value creation by using these 6 capitals: financial, manufactured, natural, human, social, and intellectual. Clear? Any doubt with this? Any doubt? Basically, if I have to give you a shortcut to remember this particular integrated reporting, okay, which is even also in your on a page number 18.9 on your study material, there it is there, integrated reporting. If I give you a shortcut, it is fish, you can say men. Fishman is a shortcut. That means financial, intellectual, social, human, manufactured, and natural. That's a fishman, way to remember your 6 C's of integrated report. Clear? Any doubt? Okay. So that's how the integrated reporting works. Okay. Now, when we talk about this integrated reporting, or when we talk about in today's term, like today, if we talk about this integrated reporting, so today this integrated reporting basically has been merged. So what is the current status of this integrated reporting is, now integrated reporting is used as a tool, like, this is used as a tool or connected reporting along with the other ESG reporting which are done. So not a standalone reporting, but along with other ESG reportings, they are combined now. Okay. For example, we will see in further questions, we will also see on the IFRS S1, S2. Okay. Then there is a, SEBI related ESG reporting that we will look into. So all these reportings are there. Reporting on the sustainable development goals is there. So all these reportings are there, which are now combined, and they are reported together. Okay. Any doubt? Any of the part? Okay. If no doubt, let's take one more question on similar lines. Okay. Now, although we have discussed about this particular question, but again, I would say a very good question. This would be, just a minute, let me share the question. There is a case study that I have, okay, on a particular integrated reporting. So I will read the case study. Yeah. So case study is Titan Steel Limited, a leading listed company engaged in the manufacture of high-grade steel for the construction and automotive sectors. Over the last decade, TSL has evolved traditional financial reporting to adopt the integrated reporting framework. In the financial year 24-25, the company undertook a massive modernization project titled Project NextGen. This involved construction of state-of-art, fully automated manufacturing plant and the procurement of advanced melting technology from Germany. These assets have been significantly increased the production capacity and reduced the carbon emission per unit of steel. However, the project was financed through mixed long-term debt and liquidation of some older and less efficient machinery. Okay, so how they were financed, it is given that. During the audit of the integrated reporting, the engagement team noted that while the management had extensively discussed its intellectual capital, okay, the technology that they were talking about, and financial capital funding of the project, the disclosure regarding manufacture capital are brief and lack quantitative details or depth. The management argues that since the plan is now part of the fixed asset in the financial statement, a separate detailed discussion in the integrated reporting is redundant. As an expert in the integrated reporting, advise the management of TSL on the definition of the scope of manufactured capital as per the IR framework. So what do you think is included in the manufactured capital? What is included in the manufactured capital?
Manufactured capital mainly talks about the machinery or the infrastructure which is used for the production.
Yes, absolutely correct. Very
About the
good.
buildings and equipments like roads, bridges.
Yes. So do you think this should be reported under the manufactured capital? What do you think?
Yes, sir, it should be reported because some of the old assets were liquefied and the finance from that is used to
Yes.
purchase new assets.
Okay. Yes, very good.
And particularly, the company is involved in construction of the state of arts, that fully automated manufacturing plant. The plant is the manufactured capital.
Very good. Yes. So basically, if we talk about in this particular scenario, plant is that has been developed, it's a manufactured capital. What is the manufactured capital? If you see, manufactured capital includes anything that is seen as a human created. Okay. So basically, if it is a human created, if it is seen, okay, then it's a manufactured capital. Product oriented equipments and tools, that's the manufactured capital. Okay, available to the organization for use in the production of goods. Provision of services, including buildings, equipment, infrastructure such as road, ports, bridges, waste and water treatment plants. Everything goes as a part of the manufacturing capital. So in this scenario also, this particular the plant we are talking about, okay, is also a manufactured capital. So the construction of the state-of-the-art fully automated manufacturing plant, which is then used for the manufacturing of goods or providing of service, will be part of manufactured capital. Clear? Any doubt? Okay. Now tell me, in this particular question only, the company has disclosed the technology patent into the intellectual capital. Okay. So what things do you think, should be part of intellectual capital then? Patent is fine. What other things do you think that should be part of intellectual capital?
Entities R&D expenditures and its future earning capacity.
R&D expenditure. Okay, very good. Yes. Okay. Anything else do you think should be part of the intellectual capital? So all the when I talk about intellectual capital, basically all the intellectual things, R&D, investment, innovations that has been done, which is created, which is obtained for the competitive advantage of the company or the organization. That is your intellectual capital. Clear with this? Any doubt? Okay. So let's take some more questions, okay, on this particular topic. Again, there are good questions given your study material. We will also cover those questions which are there in the test your knowledge section. So first, what type of companies are required to mandatorily furnish BRSR report as per the SEBI circular with effect from FY 22-23?
So top 1,000 listed entities by their market cap.
Okay. So top
1,000.
top 1000 listed entity as per the market cap. Yes, absolutely good. Very good. Anything else anyone would like to add to this? Anyone? What type of companies which are required to report on the BRSR? But like this was with effect from 22 to FY 22-23. Going forward, there are also changes happening with respect to the BRSR reporting. Okay, so now again some changes have been done with respect to the report, and with the passage of time these changes happens with the BRSR reporting. But as of now, the top 1000 listed entities still there based on the market capitalization. They are required to report on the BRSR reporting. Okay. The format is given again with the SEBI circular that is required to be followed. Before that, it was a voluntary. FY 21-22, the reporting was voluntary, but from FY 22-23, it became mandatory. So now, as of today, BRSR reporting is mandatory, earlier which was voluntary. Can anyone tell me what was the name of this particular reporting before being called as a BRSR? Quickly, what was the reporting that was there before being called BRSR? So it was not BRSR from day one. It has evolved into the BRSR reporting.
I think BRR.
What was the full form of that?
Business Responsibility Report.
Very good. Yes. So earlier there were some guidelines. There were also a BRR, okay, which became mandatory for top 1000 listed entities. Till 2019, it was BRR. That is a business responsibility report, which was mandatory for top 1000 listed entities.
I think earlier it was 500 companies, top 500 listed company.
Yeah.
BRR.
BRR, it was top 1000 listed entity based on market capitalization. Then it changed. Then gradually it changed. Okay. And then when 2021 came, this BRSR reporting was introduced, which was on the basis of the BRR. Plus, there were guidelines called National Guidelines on Responsible Business Conduct. They were also merged in this on some principal level, okay, and a combined reporting was formed. So these guidelines, basically the guidelines which were there, they were also merged into the BRSR reporting and BRR reporting and those guidelines to give a shape that we see as of today. Now comes the part about these, how this particular reporting is structured, how this BRSR reporting is structured. Can anyone tell me how this reporting is there? Like what is there in this particular reporting overall? Not in detail, but overall, what do you see in this particular reporting?
So overall, there will be the three sections: Section A, Section B, C. Like that, the general disclosure per section, it will contain that company profile, email address, who is the key persons, and what are the operations, and what is a subsidiary company, associate company, auditor. Every details will be recorded at the first part of the general disclosure.
Yes.
Then section B, management and process disclosure, wherein all the process related policies on management, process, governance, leadership, everything, it will be mentioned. What are the policy, where the policy is developed, where the policy is not developed, and all the key matters, it will be captured in each and every process, governance, leadership, all together. In section C, the principal ways, like you discussed earlier, KPI, key performance indicator, wherein the essential indicator and the leadership indicator will be there.
Yes.
The essential indicator is a mandatory disclosure. That is, leadership indicator is optional.
Optional one as of now. Yes. Very good. Absolutely correct. Absolutely correct. Anyone would like to add further to this? something further to on the reporting part?
And also they will map that 17 STG in each and every principles.
Yes, very good. Very good. Yes. So they have mapped the SGD. Plus, they have also mapped the principles on the basis of which the reporting is there. ESG principles. Now there are 9 principles categorized into the ESG component on the which the reporting is there. 9 principles of BRSR reporting. Okay. So let us take one more question. What are the 9 principles of BRSR reporting and how the 9 principles of BRSR linked with the 17 UN Sustainable Development Goals? So can quickly anyone tell me what are the 9 principles of BRSR reporting?
Ethical and human resources and safe and sustainability relating to goods and services. And again, there are one more HR related items. Production and restoration of environment.
Okay.
Stakeholder interest.
Stakeholder interest. Then
growth and equitable development.
Yes, very good.
I think 2 more are there. I could not remember now.
Protection and restoration of
I
environment
think
and
it may
provide
be
value to
added by
customers, consumers.
Yes, yes.
the respect for
Well-being of
stakeholders' interest and responsiveness. So
Okay.
it's also there about well-being of the all employees, including those in the value chain. It is succeeded by respect for stakeholders' interest and responsiveness.
Okay.
Then
Yes.
promotion of human rights, promotion of human rights,
Yes.
and protection and the restoration of environment.
Okay.
And the 7th principle goes on influence on public and regulatory policy. Principle
Okay.
8 comes
Let
to
me.
promote inclusive growth and equitable development.
Yes. Yes. So let me
Now 9.
Yes, yes. That. Which is the 9th one?
Provide value to the consumers in a responsible manner.
Yeah. Absolutely correct. Yes. But let me provide you an easy way, okay, to basically remember these 9 principles quickly. A easy way to remember these 9 principles. Okay. So let me write for you guys. First, like I will just write one word. If you remember these one words, like you can easily recall the entire 9 principles. Like first, ethics or ethical, anything is fine. Then the products. Then you have to talk about employee. Then talk about stakeholder. Then again talk about human rights. We are then talking about environment. We are then talking about policy. We are then talking about growth and community. Or you can say consumer or community, or like both are there. Like you can say community also, I can say consumer also. Okay. So ethical products, employee, stakeholder, human, okay, environment, policy, growth, and consumer. Let's see how that fits into the 9 principles that we are talking about. So the 9 principles start from your page number 18.18 in chapter number 18 on your study material. First, ethics or ethical, you can say. Second is safe, sustainable goods and services. So we talked about products. Okay, goods and services, we are talking about products. Third, promote well-being of all employees, including those in value chain. So we are talking about employees. Then fourth, we are talking about respect for stakeholders, interest and responsiveness. So stakeholders. Fifth, we are talking about respect and promote human rights. So we are talking about human. Sixth, we are talking about protection and restoration of environment. So environment. I'm just picking up a keyword. I'll tell you why. Then policy. Influence on public policy and regulatory policy. 8. Growth. In promotion of inclusive growth and equitable development. And the 9th one, what's consumer? Provide value to consumer in a responsible way. So these are the 9 principles. Okay. As I said, the easy way: ethics, products, employees, stakeholders, human, okay, then environment, public policy, or environment, policy, growth, consumer. Like this way, if you remember one word, it will be very easy for you to remember the entire 9 principles quickly. It helps you to revise the 9 principles of BRSR. Now, if you see, the 9 principles are divided into categories. Like 2 of the 9 principles are environment, 4 are governance, okay, and 3 in social. 3 in social, 4 in governance, and 2 are environment. And it is pretty much easy to mark the environment, to mark, with respect to social, and the 4 with respect to the governance. Okay. So by this way, you will be able to understand which are the, you can say principles quickly, which are there to environment, which are there to the social, which are there to the governance. And you can, by these keywords, easily remember the 9 principles. Ethics, products, employees, stakeholder, human, environment, policy, growth, consumer. Clear?
Yes, sir. Clear, sir.
Okay. So that was about the 9 principles of BRSR. But we also need to understand about these 9 principles. It is very important that we understand what are these 9 principles, and how they are linked with 17 sustainable development goals. Quickly, what are the 17 sustainable development goals? Anyone? If you remember.
Sir, first one is poverty.
Second one is zero hunger. Third one is good health and well-being, quality education, gender equality, clean water and sanitization, affordable and clean energy, decent work and economic growth, innovation, industry innovation and infrastructure.
Absolutely correct.
Life below water, life on land.
Correct. So yeah, so if we talk about 17 sustainable goals or development goals, okay. So in your study material, let me show you. On page number 18.6, you have these sustainable development goals, 17 sustainable development goals. Okay, this is the 17 sustainable development goals which are there. So these are the 17 sustainable development goals which are mapped against those 9 principles of BRSR reporting that we just now saw. And based on this mapping, the reporting is done. Okay. Now, why I discussed this mapping and this principles, because now we will take one question on BRSR reporting. So let us see that particular question. Pink Limited, a leading manufacturing company, is expanding its operation globally. However, the company has received multiple complaints from stakeholders regarding misleading advertisement and a lack of transparent grievance redressal mechanism. As a part of BRSR reporting compliance, which principle is the company required to adhere to? This principle emphasizes engaging with and providing value to the consumers responsibly and transparently. Okay.
Stakeholder interest and responsiveness.
Stakeholders, yes, very good. And there is one more part to the question which says that what are the key consumer protection aspects that the Pink Limited should focus on under the principle of BRSR? So not only the principle, but the key consumer protection aspects which are there in that particular principle. Yes. Now tell me, what are those principles? Or what should the company Pink Limited focus upon? Can anyone tell me what was the principal number? Which was the principal number? At least.
Sir, it was principle number 4. I mean,
4, sir.
4, okay.
Consumer protection, then it's this one, sir. Principle 3, promote well-being of all the employees, including those in value chain.
Okay. So principle number 3. Anyone else with a different answer?
Sir, I think principle 9 also, sir. I mean, provide value to the consumers in a responsible manner.
Sir, I think principle 4, sir, respect for stakeholders' interests and the responsiveness.
Okay, principle 4. Anyone else with any different answer or anything else to add? 4 and 5. Okay. Someone is saying 4 and 5. Anyone else? See, that's why, remember, see, I gave you a keyword. The keyword is directly mapped to the principle. Just remember those keywords in the sequence. You will get all the principles in the sequence. Let's go back to the keywords. So when I talked about the consumer, the keyword of the consumer was given at principle 9. Provide value to the customer in a responsible manner. When we are talking about the consumer in a responsible manner, we are talking about, providing them value. And if you see the question also talks about the complaints. The question also talks about, okay, the issues that the consumer is facing.
Also, the grievance redressal, sir. I mean,
yes. Plus, in the question itself, you already have value to the consumers. They have specified. So you don't have to guess. Just remember with the keyword also, you will be you will appropriately able to link to the principle. So the principle 9 is a correct one. Now, tell me what are the second part of this question was, what are the key consumer protection aspects that the Pink Limited should focus upon? We are talking about the key consumer related aspects, consumer protection related. Yes, quickly. Anyone?
Sir, principle 2, safe and sustainable goods and services.
Principle 2. Okay.
I mean, it's about making them aware about their rights and something related to it.
Anyone else with something different answer or something further to add to this one? See, what we are talking about, consumer protection. Yes or no? We are talking about consumer protection or key aspects to the consumer protection.
Yes,
So
sir.
basically, when we talk about consumer protection, okay, think of a ESG point of view, environment, social, and governance point of view. What should be the things that should be core element from the ESG point of view and the consumer point of view? You will get a hint of the answer at least.
So do not give the misleading advertisements.
Yes.
And product should be safe and sustainable so that
Yes.
consumers can use it easily.
Very
And
good.
redressal and all inquiries and all complaints and all should be given to the factory and industry in a right way, and all means given.
Yes, very good. Absolutely correct. Anyone else?
And their right to privacy of the customer data.
Right to privacy in the customer data. Okay, very good. See, let us see those core elements which are there. Again, I will also tell you that how easily we can remember this. The core element with respect to the consumer, we are now talking about consumer. Okay, and the core element with respect to this are that, first of all, reduce negative impacts of their product on the consumers, natural environment and society. Environment, governance, social and the governance, the same thing. So we are talking about lesser negative products to the society, to the environment, and to the consumers. When we are designing and marketing the products, it should be, it should be fair competition. Okay, prevent any kind of taking away that freedom of choice. Transparent and accurate disclosures that the adverse impact on user, planet, society, biodiversity. So we are talking about disclosure over here. We are talking about fair marketing over here. We are talking about lesser negative impact. On consumer. Customer data right to privacy. We are talking about privacy over here. That you should not receive calls from unknown guys about taking loans. Entities should inform customer on safe and responsible way of usage, reuse, recycling, and disposal. Ways to eliminate overconsumption. Can anyone give me best example? Do you know PET bottles? One-time use and throw bottles, plastic bottles. That's where we are talking about. Remember, you have seen on the image of that particular bottles that crush after using, throw, recycle images, recycle icons, and everything. So that's where we are talking about recycling or prevention of reuse. Okay, advertisement should not be misleading. Business enterprise should make transparent and accessible grievance redressal transparent. That means it should be easy to lodge a complaint, to see what is happening, and to reach out to the people over there. Then business of providing essential goods and services, utilities, power, universal access should be there. It should not be the case that electricity is not available, water is not available, and there should not be any non-discriminatory, or the services should not be discontinued for any reason in any non-discriminatory way. That means services should be continued in all the manners till the time it's a particularly, what you can say, there is a fault or something else, but it should not be discriminatory. Okay, so there should not be any discrimination. In case of utilities. So these are the principles, or at best, that can be done for the consumers. Less negative impact, fair marketing, disclosure, privacy, recycle, not misleading advertisement, transparent grievance redressal, and non-discrimination. Clear? Any doubt? Any doubt? Okay. If no doubts, let's proceed to one more question on similar topic, and very good one. What is the question? Question is, let me zoom in for you guys. SU Limited is amongst the top 100,000 listed entities. With the introduction of the new reporting requirement by SEBI on ESG parameters called the BRSR reporting, it requires SU Limited to make disclosures on their performance against various principles of the National Guidelines on Responsible Business Conduct. One of the principles emphasized that the business decision in an organization should be open to disclosures and accessible to the relevant interested party. Elucidate the essence of core elements associated with the aforesaid principle. Tell me the principle number first.
Principle 1, sir. Ethics, transparency, and accountability.
Very good. Okay. Anyone else with some different answer? Anyone? So
Sir,
all with a principle 1?
So I feel with respect to stakeholder interest and responsibility.
Okay. 4. You mean to say principle 4. Okay. Anyone else?
Okay. No, sir. Ethics 1 only, sir. That the principle 1 only. They see ethics and transparency only, sir. Not relating to that.
Okay. Let me tell you now. See, again, when I talk about ethics, okay, ethics, transparency, and if we see that particular principle also back, let me take you back. So that's where basically we need to understand about the principles. When I say mapping is also relevant, that mapping is very important. So when I say 4 are relevant to the governance, ethics, transparency, accountability is relevant or mapped against the governance. Governance means business decisions in an organization. It talks about the governance in the with respect to the business organization and the entity. So ethics is relevant to the governance part. Okay, business decision, and that's the principle 1. In your question, if we go, it talks about, again, business decision in an organization, accountability, ethics, accountability should be open to the disclosure and accessible to the relevant interested parties. That's where we talk about principle 1. Now here you are required to provide the core elements of the principle. So after mapping, what are the core elements? Now think of ethics, transparency, and accountability with respect to business decision, and tell me what do you think should be the appropriate way for the maintaining ethics, transparency, and accountability in business decisions.
Yes, sir. As we discussed in SQC 1 also, the firm should develop the policies and procedure with respect to this ethics, the policies, procedure, and what are the each and everything has to be developed and disclosed with all the employees.
Yes. Very good. Anything else?
entities should also encourage every member in the organization to follow the principles, and they should provide training accordingly and responsive mechanism if they do not respond to the principles or policies.
Okay. Anyone?
Like the outside the entities like supplier, customer, vendor, and borrowers, like that, if there is any adverse on the principles and the ethics which you followed by the company, that also should be monitored in the very closed manner.
Okay, very good. Yes. Let me tell you how to easily remember this part. Okay. When we are talking about business decision, ethics, transparency, accountability. Okay. So first of all, let's talk about ethics. The three words which are given, ETA. Okay. The first principle, if you have to remember, it's easy. ETA or ethics. When you say ethics, ETA. Ethics, transparency, and accountability. And the elements which are there are divided between these three: ethics, transparency, and accountability. When I talk about ethics, for ethics, you need PPP, that is policies, procedure, and practice. And how you can implement ethics through PPP? That is, first of all, you develop PPP. Second, you communicate PPP. So you develop policies, procedure, and practice for factories, work areas, and ensuring ethics is not compromised. Then information regarding these policies, procedure, and practice with the performance should be made available to the stakeholders. So communicate this PPP. That first develop and then communicate. Now that was the ethics part. This part is E part. Now we are talking about T. That's the transparency. Transparent disclosure. When I say transparency, that make sure that you have a, in case of adverse effect, you make transparent disclosures. For all the adverse effect, you make the transparent disclosure, and more care should be taken for the transparent disclosures. Okay. So this is on the transparency or transparent disclosures. Then comes the accountability. Okay. Accountability means you have to encourage people to adopt this, or if they are not adopting, then take action. First, encourage to adopt. If they do not adopt or violate 9 principles, then in that case, you may respond proactively and take action. So encourage and respond for violation. That's the ETA. Okay. So principle 1, ETA, develop, communicate PPP, transparent disclosures, encourage adopting these policies and these principles, 9 principles which are there. If they do not respond proactively, whoever so violates these 9 principles, including supplier, distributor, subcontractor, regulator, officer, all those people. Clear? Any doubt? Any doubt? No? Easy to remember? Yes or no?
Yes, sir.
Okay, great. Now let's take one more question on similar topic. Okay. Now, basically what we are going to do is we are going to take one more question on this topic, so that we should have this appropriate understanding that how to answer the questions when they come on this particular topic. And it is basically, if you see, once you understand the concept, it's not difficult. It's just understanding the concept in these topics. Okay, if you understand the concept, it's there. Okay. So the question is, ESG disclosure and reporting is mandatory for top 1,000 listed companies in a form of BRSR. As the reporting for sustainability information becomes a trend being observed globally, the demand for independent assurance of sustainability information is anticipated to grow as entities around the globe look to enhance the integrity of their sustainability reporting. In developing the understanding of the entity, the auditor should include conversation of climate-related risks and how these risks may be relevant to the audits. Many investors and stakeholders are seeking information from auditors' report about how climate-related risks are addressed in these audits. Okay. In the context of above, describe the role of auditor in auditing the financial statement of the company. So you can say, consideration of climate related risk in an audit of a financial statement. Kind of a mix of whatever you have seen in the auditing of a financial statement, but now we are focusing on a climate related risk. It's a mix of two different two topics. You can say normal audit plus your ESG.
First of all, auditor should understand how the climate related risk is affecting the entity. And there can be financial aspect as well as non-financial aspect, and he should link the non-financial aspect of the climate related risk to the financial aspect and report it in the report.
Okay. What else? Like what we are see, the question is what is talking about is, okay, in the context of award, describe the role of auditor in the audit of financial statement of the company. But many investors are seeking information from the auditor's report how climate related risks are addressed in the audit. So basically we have to talk about the climate related risk, how it is being addressed in the audit.
Sir, usually auditor can give in the emphasis matter paragraph, sir. He can very well explain that in the emphasis matter paragraph.
Okay. Anyone else? What do you think, the role of auditor should be? Like how auditor should, look into the risk? Okay, forget about the climate related risk. If it is a normal risk, what is the responsibility of the auditor?
Responsibility auditor would be that whether that company management has appropriately assessed and disclosed in the financial statement. The first thing that the auditor will look into it. The same way the climate related, whether that management has appropriately assessed the climate related risk and whether it is appropriately disclosed in their report.
Okay.
As per the applicable financial framework.
Okay.
And also if the auditor feels that he can update in the emphasis matter paragraph, definitely.
Okay.
As per SC 720.
Yes. So when we talk about the auditor's role, okay, with respect to the climate related risk. Now, risk is risk. Like, it could be climate related, it could be risk of fraud, but the procedure and the things will never change. As I said, what is the role of auditor? The role of auditor is going to remain the same. If it's a climate related risk in an audit of a financial statement, if there's any other risk. If it is the audit of a financial statement, the role of the auditor is to obtain reasonable assurance whether financial statements are free from material misstatement or not. Now, that material misstatement can be due to climate related or can be due to anything else. Okay. When I talk about climate related, the thing is, if it is a climate related, first of all, ensure your financial statements are appropriate. They are free from material misstatement. Okay. They are fairly presented. That means you have appropriate disclosures, whatever is required. Then when you are doing the audit, okay, you have to perform appropriate risk assessment. You need to understand what is your applicable financial reporting framework with respect to climate related information and disclosures. In order to understand whether my financial statement are materially misstated or not, I also need to look into the financial reporting framework. So first of all, overall financial related, financial reporting framework related, then you look into the reporting standards if there are any specific to the climate related disclosures, auditing standards if they are, and then understand the responsibility of the auditor for climate related risk. See, there could not be any climate related risk is a very big topic. It's not a small topic. If it is not a small term, it is a very big term. Okay. So in that case, we need to understand what is the responsibility of the auditor with respect to reporting on the climate related risk, with respect to auditing on the climate related risk, and with respect to BRSR. You are an auditor. How you are linked to the BRSR? Can anyone tell me? If you are an auditor, how you will be linked to BRSR reporting?
Link mean in which country, sir? Linkage mean from where to where you are talking about?
Like you are the auditor of the company, correct? So how you can look into the BRSR reporting? Are you mandatorily required to look into the BRSR reporting being an auditor of the company?
Sir, as per the SA 720 other mentioned information, we have to see other than the financial information, what are the information is provided with respect to the in that report, in the other information. In that, we have to see any the financial data is captured from the financial information, whether that is reported there or not, whether the number is matching or is there any misleading, that we will see. Also, we will check the other information. Is there any misleading, any data, something is given? We will check and we will inform. That's it.
Yes, very good. SA 720 places a responsibility on the auditor to look for the other information. That other information means that the information which is there in the BRSR reporting also. Okay. So that now you being an auditor, SA 720 is applicable to you. So in that case, it is your responsibility to look into the BRSR reporting and if is there any contrary to what you understood for the purpose of audit. So as a result, you have to also check the compliance for SA 720. Clear? So this is how, as an auditor, you are connected with the climate related risk, and these are your responsibilities. Clear? Any doubt? Okay, let us see the answer also quickly. So role of auditor with respect to the climate related is to obtain reasonable assurance. Because you are auditor, till the time you are auditor, your overall objective is not going to go is not going to get changed. If you are an auditor, if you are concerned with an audit of a financial statement, overall objective is going to remain This only, obtain reasonable assurance about the financial statement. After that, once you obtain reasonable assurance, then you look for the applicable financial reporting framework. Determine what are the climate related informations which are there. Then you think of, okay, what are the considerations of climate related risk, how they are relevant to the audit of a financial statement, how they are impacting your financial statements. Then follow applicable accounting standards. Understand what are the matters that you are required to report. What is your responsibility as an auditor? Okay. If required, then include EOM paragraph, and at the end, remember SS 720, reason because BRSR is going to be part of your annual report. So as by the way of SS 720, it is going to applicable. You are required to look for any, for the other information if there is any material inconsistency. Okay. So FS as whole, then go for FRF, then go for how it is relevant to audit. Then you need to check what auditing reporting standards are there. Auditing standards. Then based on the standards, your responsibility will come into the picture. Auditor's responsibility. If required, provide EOM paragraph, or one of the responsibilities SS 720. Clear? This is how the role of auditor is there with respect to the climate related risk. A mix of topic with respect to the climate related risk plus role of auditor. Any doubt?
Yeah, it's a very good question, sir, actually.
So not necessary that you will get a straightforward question on the principle. There could be a question on the mixed topic. See, in this particular chapter, if I have to tell you, this is chapter number 18. What you need to do is go through the 9 principles in detail. Understand the 9 principles. Okay. Because these are very important 9 principles. And we have seen a lot of questions also, 9 principles, because they are the part of BRSR reporting. Now, so go through these 9 principles in detail, understand what is required to be reported in each of the principles. If you got the understanding, you will be able to write the answer. You will be able to, easily understand what is there in the question, able to correlate and write the answer. That's why I said these revision lectures are not the substitute of your full-fledged reading of the study material and watching lectures. These revision lectures are complementary, are add-on to the, you're reading, you're attending the previous LVC sessions, okay, and doing a practice of the questions. Number 2, when you write the answer, write in a proper sentence format. For example, when I might provide you, shortcuts to remember, but that is to remember. You need to understand how to then, frame the entire sentence. No one is asking you to, write the same sentence. No one is asking you to, copy paste the entire wordings with a and the. No. But the understanding and the concept should remain the same. So the keywords that we are giving to you, those based on those, you need to remember, okay, what was the concept, and you need to write the concept. So keywords are there to make you remember the concept. Okay. For example, safe and sustainable goods and services, principle 2. What is there in principle 2? The core elements. If there is a question on the goods and services, faulty goods, the goods were not up to the mark, adulteration in the food related items. So what company should do then? So when a product is designed, the production method that are used, technologies, okay, should be designed in a way to minimize the resource usage. Why? because we are talking about safe, sustainable. So first, sustainable means that resource usage. Educate and make aware their consumers and clients about their right. Again, safe and sustainable. Reduce over exploitation of the natural resources. Again, all these 3 points, if you talk about, they are on the resources usage. This is usage of resources. This is rights and exploitation. By this way, you can ensure that the company can ensure the safe and sustainable goods and services are provided. So develop your own keywords if you require, okay, to remember the principles, but the concept should remain the same. You cannot alter the concept, remember that. Now, for example, if there is something with respect to the transparency, then that doesn't mean it goes to the principle 4 on the stakeholders' interest and responsiveness. You need to understand the difference between each and every principle to answer the question on these principles. Plus, in this particular chapter, we have seen 6 C's reporting, integrated reporting. Understand what is there in each of the integrated reporting capital, the 6C capital, okay? Also, understand from where what is coming, like, the history, the background. You should have the understanding of that integrated reporting was there from this particular, International Integrated Reporting Framework Council, how it came, okay? What is the start of the ESG, from where it came, where it is going, what is the current status, what are the, steps taken by the institute with respect to the ESG. And one last topic that I would like to highlight, which is also part of this particular chapter, is social auditing standards. Just to tell you quickly about social auditing standards. Okay, these standards provide that what should be done, how social audit should be performed of these programs. If a program is related to eradicating hunger, poverty, malnutrition, inequality, then SAS 100 should be used, which set out the minimum requirement to be followed while conducting impact assessment of that particular program. So this is on the social programs, and the social auditor is required to follow these standards when he is doing the social impact assessment or audit of that particular program. So what is the role of social auditor? To independently assess the impact of that particular program. Now these are the themes on which the program can be based on: hunger, promoting healthcare, promoting education, promoting gender equality, ensuring environmental sustainability, protection of national heritage. So for each of the theme, we have a social standard. Okay. For each of the theme, we have this social auditing standard that are required to be followed when you are doing a social impact assessment of that particular theme of program. Clear? Plus, again, role of auditor, consideration of climate related risk and audit of financial statement. We also saw a question on this particular part as a mix of both, okay, which is given over here. Any doubt with respect to this chapter number 18? Any doubt? Whatever we have discussed till now. So we covered 2 chapters, chapter 12, chapter 18. Chapter 12, quick revision if I talk about digital audit, auditing digitally, the difference between both we discussed. Okay, then we went ahead, understood how to understand the IT environment. We also discussed about the IT risk and dependency. We discussed about assessing cyber risk. Then we shifted to cyber risk assessment or cyber security framework: identify, protect, detect, recover, and respond. We also saw some of the with respect to how cyber security with respect to some of the areas like vendor master setup and modification. Okay, benefits of digital audit and auditing digitally, the difference between both, all these things we understood in chapter 12. Chapter 18, 6C, integrated reporting, BRSR reporting, 9 principles. Okay, then we saw how these 9 principles are related to sustainable development goal 17. Then we saw with respect to how to easily remember 9 principles, role of auditor, consideration of climate related risk and audit of financial statement. Okay, we understood that. Okay, and this is the majorly we have covered the chapter number 12 and 18 today. Again, before closing the session, any doubt? No? Okay, if no further doubts, then thank you for attending the session. I will see you in the next session. Thank you, guys.
Thank you, sir.
Thank you. Yes, session over. Thank you. Good night.